Cryptocurrency prices have fallen more than 40% since mid-November, according to the CoinMarketCap. Bitcoin peaked at over $69,000 in November before plummeting to around $36,900 on January 21 trade. According to the senior market analyst of Owanda, Edward Maya, there is not much support till the $30,000 level. If this trend continues to plummet, what will the top two cryptos face this 2022? Let's hear from Cathie Wood. If you are new to this Dinero Association YouTube channel, make sure to hit that subscribe button and notification bell so you don't miss any of our videos. Warning: inflation or deflation will fall on Bitcoin and Ethereum. Cathie Wood. Those who have been following Cathie Wood and her firm ARK Invest throughout 2021 will be aware that they, along with the majority of investors, believe we are on the verge of a deflationary crash. However, she did admit that ARK may have misjudged the repercussions of the enormous money production and that many warning indicators were pointing to an impending inflationary collapse. To be clear, Cathie and ARK Invest in continuing to believe that deflation is the most likely conclusion. However, specific indications have shocked them regarding higher than expected inflation, which they will be closely monitoring. We'll look at 3 reasons why Cathie Wood feels we'll witness deflation or not in this video. The king of cryptocurrency Bitcoin is widely regarded as a gold equivalent as a safe haven commodity and inflation hedge. Let's take a closer look at this position and determine if it's true. The most severe subject discussed in today's newspapers is inflation and whether it is under control or not. Because of the continual rise in consumer prices, investors and individuals in general are always on the hunt for hedges that will safeguard their money and, more importantly, their spending power. The central bank's creation of money, which it conducts in times of crisis to jumpstart the economy and increase demand for products and services, exacerbates the need to protect one's wealth from depreciation. On the other hand, the printing of money dilutes the value of money. This money dilution benefits any dollar-denominated asset, such as gold, Bitcoin, and commodities in general. The Bitcoin versus Ethereum debate has raged for years and is becoming more heated as the market matures. One of the most fantastic diversions for the market has been pitting the 2 most popular cryptocurrencies against each other. However, not everyone believes they are in a competitive situation. Cathie Wood, CEO of ARK Invest, is well known in the crypto community for her views on Bitcoin, but Ethereum has mostly been ignored. Wood is well known in the field for her prediction of Bitcoin reaching $500,000, which she has stood by at various times. The CEO has long stated that she believes Bitcoin is cheap and has a lot of room for growth in the coming years. On the other hand, Wood has pointed out that Ethereum, the #1 cryptocurrency, is even more discounted than Bitcoin. Ethereum is still reasonably priced. Wood spoke on CNBC to discuss cryptocurrency. The CEO stated that Ethereum was still undervalued. She exemplified this with Bitcoin, the largest cryptocurrency on the market, which she believes is still undervalued. Wood emphasized that even if Bitcoin is discounted, Ethereum remains so. Ethereum's utility has been a significant motivator of interest. After a year of decentralized finance, Ethereum now powers most DeFi operations. Wood praised DeFi's contribution to the success of the digital asset. He asserts that Ethereum is still a baby and has a long way to go, whereas Bitcoin has already achieved currency status. She added that institutions will increase their investment in DeFi and NFTs, thereby accelerating their growth. Hey, take a breather there for a moment. We're almost there. If you have not yet subscribed, please click the subscribe button to ensure that you don't miss any of our videos. Watch out for what is coming. Almost everyone, including Buffett, Dalio, Burry, and even ordinary folks like us anticipates massive inflation, with so much emphasis on consumer price inflation. Many investors feel it is permanent. Cathie Wood notices something different. According to the new economic data, inflation is reducing and may continue to do so. In general, a slowing of inflation makes logical. There will be no further stimulus checks. This year, the Federal Reserve may contemplate tapering, rapidly expanding throughout the United States. Decelerating inflation, sometimes known as disinflation, makes sense for the reasons outlined previously. Additionally, last year's third quarter economic data hint at deflation. The most recent report indicated a significant decline in non-farm payrolls. Non-farm payrolls are a proxy for the total number of non-farm workers in the United States. Monthly or annual comparisons of non-farm payrolls are used to assess the labor market's health. Labor markets were predicted to be thriving in August, according to economists. August non-farm payrolls were expected to increase by 733,000 over July's. Payrolls for non-farm workers increased by only 235,000 as expected. That is a significant difference. Typically, economists are off by a small amount. This is an unmistakable indication that the economy is slowing. This could happen for many reasons. The chip shortage is becoming more severe, and the Delta variation spreads rapidly. Both of these indicators may contribute to the contraction of the labor market. Additionally, there may be a more concerning component at work, which we will discuss shortly. As can be seen, both the Delta variant and chip scarcity lead to job losses. The fact that the economy is contracting may play a role. Cathie Wood has been warned of an impending deflationary collapse. The total number of automobiles sold fell from 18.7 million in April to 13.4 million in August 2021. This is partly because of chip shortages and the transition to electric vehicles. Electric vehicles have risen in popularity during the pandemic. The rise of EVs may be eroding auto sales, particularly of older vehicles. Another point of contention is the growing consumer inventory. During the outbreak, several people purchased cars to avoid public transportation. Consumers purchased vehicles hoping that they would not need to buy another for an extended period. Chip scarcity, EVs, and consumer car inventories contribute to stagnating the overall auto market. Outside of the automobile industry, inflation appears to be receding. M2, a measure of the total supply of dollars, is now rapidly falling. M2 money growth has slowed to 13% in August, down from 27% in February. While this may appear to be a significant decline, it is only the beginning. The money supply of the dollar continues to expand rapidly, but is already slowing. According to current sentiment, the money supply is expected to continue to slow. A smaller than expected infrastructure bill could cause the economy to stagnate even further. Consumers are concerned about inflation and the growing U.S. debt. This avoids the occurrence of a self-fulfilling prophecy. Because Americans are worried about inflation, officials must rein back government spending. Subscribe and hit that notification bell to help us produce more wealth-building content. You can count on Dinero Association to keep you up to date on the latest financial and economic developments. Tell us what you think about this video by leaving a comment below. We are Dinero Association, your partner in building wealth.